My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with the Internal Revenue Service. Welcome to my YouTube channel. My YouTubes are short, they're sweet, and they're to the point. And I'm going to be talking today briefly about how to deal with an IRS debt. There's about 25 million cases, collection cases, that will be open by the end of this year. So there's about 25 million people dealing with different sorts of IRS taxes. Beside the individual taxes, you got 941s, you got trust funds, you got payroll, you got estates, you got excise, you got all sorts of situations. But IRS treats the debt all the same way. They want to look down at your current financial statement and they want to make a determination how they're going to deal with this. Doesn't make any difference what the tax is, whether it's business tax or a personal tax. So what does IRS actually do? They go ahead and look at a financial statement, their financial statement, of course. The Service Center, for smaller cases, uses IRS Form 433F. The larger cases, IRS, through a revenue officer, will ask for the 433A. With that, they're going to want those forms fully documented. If it's a small case, you can usually take care of it yourself. If it's a large case, I wouldn't suggest you doing it. Former IRS agents like me always love for people to be unrepresented. You don't even know what to challenge if you're the normal taxpayer. So sometimes you get nice people and they have a good result. Sometimes you get ugly people and the result's not going to be so bad. So what IRS is going to do is once you fill out that financial statement, they're going to want to make sure it's right. How do they do that? They're going to ask for the last 6 months bank statements. They're going to look at your cost of living, your tax return, financial statement. They want to make sure everything ties together. They're going to want pay stubs. They're also going to want to see a list of your expenses. So once IRS gets that all together, there are national averages that IRS allows for expenses. So once they know where you live, they put you in a category for that city or town and say, okay, this is what you're allowed to live on. And if there's any money left over, they want it. And that's what the negotiation is with Internal Revenue Service. So, but when you deal with IRS debt, two things you want to make sure are very important. First is that you file all tax returns. If you have any delinquent returns, make sure they're up to date. IRS loves that. And make sure you're current in the year you're in. So let's say we're in the year 2021. You want to make sure your withholding or your 941 deposits or your estimated payments are up to date. IRS doesn't want to deal with a continuing problem. They want to draw a line in the sand, make sure everything is up to date, and then work for the back problem. Anyway, me and my M&M man give you a thumbs up today. Thank you for listening.